What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at Nvidia stock, ticker symbol NVDA, on a variety of time frames in anticipation of the next trading day, Monday, April 29th. All right, guys, Nvidia stock here to finish out the week on Friday finished the day up $51.03 per share. That's plus 6.18%. That's, of course, regular trading hours. It is up a little bit here in the after hours, a couple extra points. Again, volume's low. Take any after hours movement with a grain of salt. Listen, let's pull out as much bias as we possibly can. A good day here for Nvidia stock, reclaiming a huge level back in an important channel. We're going to talk about that. Let's pull out as much bias as we can possibly get. The market was willing to give us here on Friday to finish out the week. Starting with a quick little analysis of the volume profile on the 5-minute chart. Listen, by the way, if you're new here, I do cover Nvidia stock every single day, so I appreciate it if you subscribe to the channel, and I'll keep the videos coming. Now, what we're looking here is really we're separating the actual price action and the volume, and we're looking at them as two separate entities to see, okay, the price action did what it did. Can we look at the volume and find supporting bias in the volume? So bulls, of course, big bullish day. We want to find some bullish bias, some supporting bullish bias in the volume profile. Whereas bears, it's already up 6.2% today. Okay, so if we're going to look at the volume profile and you're a bear, you want to see either some bearish bias, like that's overwhelming on these little pull-ins, but more realistically, you wouldn't be so upset with no bias at all, because at least it's not massive supporting bullish bias to support what we already know happened, which is a 6+% day. So let's take a look here. Obviously, we're looking at these big moves primarily. Okay, contextual open, if we compare that, pretty normal volume on the opening bar, a little higher than we had on Thursday. Fine. Okay, we said fade to start. Listen, it's a green open, fine. I usually ignore the opening bar unless it's tremendous, absurd volume, which we're not really seeing here today, or at least here on Friday, of course, depending when you're watching this. As soon as we hit that second 5-minute bar, we had a couple of not extreme movement red bars. Okay, a lot of wicks on the downside there, right? Volume tanks. And then what we saw is this big bullish push. And do you notice anything in the volume profile? An increase of volume and sustained volume deep into the day, whereas typically we expect this fade of volume into kind of mid-morning. Honestly, like the later portion of the early morning, you see this big fade, and then volume kind of sits in this bull region until it increases at the end of the day, which is very, very normal. Well, we had this increase, and it was sustained, right? Which tells me that that's very obvious bullish bias, supporting bullish bias on that upside move on the break of 850. It's not uncommon at all when you break big levels like this to see a bias, because oftentimes that's what it takes in the volume to really push the price higher than or through a level, whether that be higher or to the downside. Now, moving through here throughout midday, nothing exciting occurs, and then we get to around 1 p.m. New York. My charts are, of course, on Central Time. As we push into the intraday high, let's look at the volume on that move. This is very slight. It's not overwhelming, but I want to point it out. You see some obvious bullish bias, and then as soon as the stock retreats, as soon as it pulls back and kind of fades from the intraday high, right? A lot of people would look at this and say, well, you know, here to here is a net neutral move. Well, if you're looking at kind of one dimension, right, one layer of the onion, it might look that way. But if we pull up the volume profile, you'll notice that we see low volume on the red bars, increasing on the green, and then the volume tanks as soon as the stock starts to pull back from that intraday high. This is very reminiscent of like a breathe and go setup. And the reason I trade, like on an in-play stock, for example, the reason I trade those so often is because you're seeing a higher level of confidence in the push upside, and then as soon as the stock pulls back and the buyers need to kind of look to start reloading because they kind of run out of gas, you see the bets being placed tank. cut in half, right? Nearly. That, to me, that tells a story. And again, it's not tremendous. Okay, it's not ridiculous. We're not seeing 1.4 million and then 400,000. But there's a pattern there, and I'm consistently looking for that pattern, especially like scalping intraday, but really on any time frame. So again, it's slight, but there is a small amount of bullish bias as we pushed into the intraday high. All right, and then into the close. To me, this is very normal. This bar here, I know a lot of you guys are looking at that, probably salivating if you're a bull. Hate to be the bearer of bad news, but the truth is we're seeing this like every day on most blue chip stocks, at least a lot of them, Nvidia, Tesla, a lot of them. That's institutional rebalancing. What I think we were seeing is algorithms being triggered after the bell. A lot of buying and a lot of selling going on. It very rarely leads to much movement at all, but it's very high volume. And that's, to me, is likely because it's just a battle bar. A lot of buying, a lot of selling to do some rebalancing. And all that leads to high volume and very little actual movement. Now, let's move on here and take a look at the self-fulfilling prophecy psychological levels. Let's start on the 30-minute chart. If you guys remember on Thursday night's video, heading into Friday, we talked about that big reclaim of both of those levels, the 50 period and the 200 period. Okay, we didn't see we saw a little bit of increasing volume on the push upside through right on that after the retest, but it wasn't ridiculous. Now today, we did not see a retest of either of those, which is fine. Okay, because I think today was an important day regardless, because we yanked that 50 period, which by the way is nothing more than a psychological level in my head, but that's very important because in the very short term, psychology is king. As you move out to midterm, and of course, especially long-term, fundamentals win every time. Okay, but in the very, very short term, that's why I love to focus on the following trading day in these videos so much. It interests me the most. Fundamentals, it's not, it's a different game, really. But in the very short term, it's a game of short-term human psychology. Because even though 70, arguably 80% of volume in the market is carried out by algorithms, humans wrote the algorithms. Okay? And when you're dealing with a self-fulfilling prophecy mentality like market, especially like intraday in the short term, they're going to write the algorithms to carry out orders with the idea of being profitable. Okay? And usually that means supporting ideas that stem from that self-fulfilling prophecy mentality. What I mean by that is if you see a test of like, let's just say something really simple, like the 50-day moving average, okay? Everyone has that on their chart, right? What will happen very often is you'll see perfect respects, okay? And in hindsight, it's like, wow, it really bounced perfectly off the 50-day, or really rejected perfectly off that 50-day, or that 200-day really acted as a perfect resistance level, right? How could that be? Well, when you have a big chunk of market volume seeing that, and everyone's using it, and everyone kind of believes that it serves a purpose, and people are paying attention to it, they believe it works, it tends to work. It's really that simple. Okay, that's why I keep my charts so stupid simple. I don't want anything fancy. I don't want any indicator that claims to predict the future. Nothing. All I want is to be able to, as effectively as possible, read the very short-term psychology. That's all I'm interested in. Because in my opinion, in the extremely short term, it's almost all that matters. Of course, earnings events like that, I mean, that changes things fundamentally. But those changes get priced in very quickly, okay? And then it's back to psychology as usual. But, this 50 period getting yanked up, to me that's an important, because we're seeing a crossover now in the after hours above 850. And 850 was the big break today. Okay, we hesitated in the after hours Thursday, pushed through, and continued to run and then consolidate into the close. That consolidation into the close, to me, not a bad thing to see. Okay, it shows a little bit of comfort rather than more of an aggressive pullback. But bulls, really what I'd be looking for on Monday, I want to see continuation of that 50 period getting yanked upside, getting as close to that level, or the price, I should say, as possible. That psychological potential area of support, getting as close to the current stock price as we possibly can get. Okay, and then any downside test of that, I just want to see a high volume bounce. Whereas bears, as high volume as possible on a break downside through the 50 period, right, which is likely to continue moving upside, making that a smaller necessary move to test that to the downside. Bears, you want to see a high volume break, low volume retest, right, and then claim it as short-term resistance with a high volume rejection. Now the 4-hour chart, let's take a look. Today was a very big day. Okay, not only we just reclaimed the 50 period on the 4-hour Thursday, and we talked about this, all right? It hadn't proved itself even a little bit yet. Well, it's almost like this was made for this video, you know, based on what we talked about on Thursday. This is just about as proving yourself as you can get for one day. Okay, things can change on a dime, remember that. But for one day, this is about as obvious as you can make it for us, you know, here this weekend. We got a high volume push, we tested it, we held it all pre-market. Then upon the open, we see a high volume push up off that 50 period, using it as kind of a trampoline, right? Like we always talk about, pushing through 850, carrying that momentum, kind of stalling out as we came into that 200 period, right? Everyone's paying attention to that. And we barely closed right on top of it, okay? But it was, you know, arguably a late day reclaim. Okay, so realistically, guys, come Monday, bulls, this is really simple. I would love to just see that 200 period on the 4-hour hold. If we can add some on top of it, great. But a hold the 200 period, an obvious hold at that, that's great for me on the 4-hour. Bears, you want to give that up. Okay, at least you already gave up the 50 period in a big way. If you're a bear, at least reject off the 200 period and show the market that, hey, we're not ready to reclaim that quite yet. All right, now, the most important of all, this is a big deal, guys, because this was certainly a contributor to the volatility here on Friday. You probably noticed this. That white line, this is the daily chart, right? Everyone's watching this. That white line is the 50-day. This chart with that moving average, probably out of everything we've looked at so far today, has the most eyeballs on the planet. So when you have it lining up with 850, like we've talked about recently, and 850 is also a relatively obvious technical and now kind of psychological level as well, they tend to turn into each other, right? Technical tends to turn into psychological, psychological tends to turn into technical, and either or usually kind of just ends up both if it gets obvious enough. When you break both of those at once, it's really common in setups like this, on a variety of stocks, of course, to see that volume kind of push over, right? It builds on itself. It's like, if I compare this to like a really short-term breakout intraday scalp setup, what you end up getting, you know, like you're watching the level 2, you're pushing up against a resistance level. I've always liked to think of it as like a big mob of people at a festival or something crazy, and they're all pushing on a fence, okay? And it's moving, but it's not breaking, and they're trying to get through for whatever reason. It's like a movie scene. And finally, on that one last big push, everybody, the fence gives out, and everybody falls on top of each other through the fence, right, as it tips over or whatever would occur. In kind of a literal way, you're seeing the stock finally carry enough momentum to break the 50-day and 850. So people who aren't necessarily watching the 50-day but watching 850, now you have their eyeballs. People that are only watching the 50-day and not 850, you have their eyeballs. Then, of course, you have a lot of those people watching both. All right? You have people watching the hold of the 50 period on the 4-hour. You have so many things lining up that eventually, when this all starts to hold/break, you get buyers just falling all over themselves, falling all over each other to pile in, okay, because they don't want to miss the push through. And you get a 6% day. Days like this are really important in breaking trends, especially negative trends like we've seen over the last few weeks here. Okay, but that doesn't mean that bulls are necessarily out of the woods. All right, we're now approximately halfway between 850 and 9. That's a really obvious channel that we've struggled with here. Bulls, obviously, next area to watch for me is $900 a share. In the case of a downside test, I want to see 850 hold. 850 / the 50-day moving average. That would be highly important to me. Whereas bears, any test of 9, that's already more against you. Okay? But having 9 hold as a resistance, if I'm bearish, that's very important, because a break and hold of 9, all of a sudden that opens up an argument for all-time highs / $1,000 a share. All right, but bears, to really start to feel comfortable again, getting back below the 50-day moving average and 850 a share would be important. All right. Implied volatility, not a lot of change. It is creeping higher and higher back into, compared to the last month or two, kind of like the mid-range. Okay. It's in that kind of like no man's land area where there's no real obvious IV-based opportunity when it comes to buying or selling premium options contracts, right? But it's important to keep track of that. Of course, you can still trade them at this time, but it's just not like, if you have an extreme bullish bias, right? And or either side, but let's just use bullish as an example, and IV is extraordinarily low for the last 3 months, and you're looking to buy options for 1 to 2 months out. Well, that, to me, that's obvious. It's like, okay, buying options, IV is very low. I expect that to potentially return to equilibrium, and I have an extraordinary bullish bias that outpaces the market's expected volatility in that same time frame. Okay, in that case, I'm starting to think, okay, buy calls, because you're kind of starting to get everything line up in your favor, right? Right now, IV is kind of in the middle, so we're kind of in no man's land in terms of implied volatility. Now, expected move. Okay, guys, the next expiration that we have is next Friday, May 3rd. The expected change that the market is telling us between today, Friday's closing price, and next Friday's closing price is plus or minus $50.79 per share. Okay, so if we take that, we divide that by 5 trading days, because we have 5 trading days between now and then. Of course, it's not like we have any earnings between now and then. The next earnings, of course, May 22nd. All right, we divide that by 5 trading days, because there's no one day that we expect some ridiculous outsized volatility event more than the others. And we get a plus or minus expected move on Monday of $10.16 per share, but we're not done. Right, that assumes 5 green days or 5 red days in a row. So we have to add back, right now I'm adding back 50%. So the expected move on Monday, the reason it's Monday and not necessarily every day is because we're going to have updated information for, Tuesday through Friday once we get to that, because that changes each day. But for Monday, with a little bit of guesswork, okay, as best as possible, to me, I'm looking at this, and the market's kind of expecting a plus or minus move of about $15.24 a share. Remember, that is not meant to be an exact prediction that's correct all the time. I think of that as like the line, right? Like the line on the game. That is quite literally, the expected move is quite literally the one standard deviation expected move, expected volatility, okay, for Monday at the close compared to Friday's closing price. So if you disagree with that, that's actually a good thing, because that could potentially open you up for some opportunity to position yourself to make some money. All right. Last thing here. Some of you are like, well, where's the directional bias? Well, here's the directional bias. This is the actual data from the options traders from just Friday. Okay, we had 2.7 million contracts traded just on Friday. 1.7, we'll round up just a little bit, 1.7 million calls and 1 million puts. So honestly, guys, one of the heavier call side biases that I've seen on Nvidia in the last, well, in recent memory at least, that's a relatively heavy bullish bias for Nvidia, relatively heavy bias in general for Nvidia. But if we take a look at this and we break this down by short-term speculators, the 0 to 20 delta range, we had 614,000 calls and 536,000 puts. So the bias gets a little bit smaller, a little bit slimmer when we start going to the short-term speculators on their own, but still a bullish bias nonetheless. Listen, guys, again, NVIDIA is a daily upload. If you get value out of these videos, I ask you to do one thing. It's free, takes half a second, and it helps me out tremendously. Please just leave a like on the way out and then get out of here. I appreciate it. I'll see you in the next one.